Fed's Waller backs another large fee hike for all-in inflation combat. Federal Reserve Governor Christopher Waller on Saturday have become the today's U.S. relevant banker to pledge a whatever-it-takes method to fighting inflation, 3 days after the Fed raised interest quotes by means of 0.75 of a percentage factor and signaled extra hikes to return. If the data is available as I assume, I will assist a similar-sized pass at our July meeting, Waller advised a Society for Computational Economics conference in Dallas. The Fed is all in on re-establishing fee balance. A surge in inflation, which is at its maximum level in 40 years, has made hawks of nearly all Fed policymakers, only one in every of whom dissented earlier this week in opposition to what was the primary bank's biggest price boom in extra than a quarter of a century. Policymakers presently count on to raise the Fed's benchmark in a single-day hobby rate, now in a range of 1.50% 1.75%, to as a minimum 3.4% within the next 6 months. A year ago, the bulk idea the charge could need to stay close to zero till 2023. On Friday, the Fed referred to as its fight against inflation unconditional, and Atlanta Fed President Raphael Bostic, who have been its maximum dovish policymaker, declared, "We're going to do anything it takes to convey inflation back down to the central bank's 2% target." Inflation, as measured by using the Personal Consumption Expenditures Price Index, is walking at more than 3 instances that level. "That's the most critical issue I'm concerned about," Waller said on Saturday, including that shifting quotes quick up to the impartial degree and into restrictive territory is essential to slow call for and put a take a look at on inflation. That financial tightening will probably pressure unemployment, now at 3.6%, to among 4% and 4.25%, or probably higher, Waller stated. "However, my aim is just to gradual the economy. Rising worries that Fed rate hikes will purpose a recession," he stated, "are a bit overblown." Waller also stated there are limits to how rapid the Fed can circulate. Markets would have a coronary heart assault if the valuable bank raised quotes by a complete percent factor in an unmarried move. Risk of overshoot. Speaking at the identical event in Dallas, former Fed Vice Chair Donald Cohn blamed high inflation in part on a selection to delay the tightening of coverage that he traced to a framework the U.S. valuable financial institution adopted in 2020. That framework dominated out elevating quotes to preempt inflation brought on by means of falling unemployment. Waller, but, argued that it was the Fed's overly precise guarantees approximately whilst it might cease its big asset purchases, carried out in 2020 to safe haven the economic system from pandemic-related fallout, that were at fault. Structural modifications to the economic system mean there is a decent chance the Fed will within the destiny want to once more minimize its coverage fee to zero and purchase bonds to fight even a standard recession, he said. Waller said, next time, he could assist less restrictive promises across the quit of bond purchases and extra readability round now not simply whilst the Fed would start to tighten policy however additionally how fast. If the Fed says it will not begin elevating costs until the labor marketplace is at full employment, as it did inside the current cycle, markets must be primed to understand that borrowing charges might be driven up very quickly once costs begin to upward thrust. Cohn, for his component, advised a few warning as soon as rates are high enough to start slowing inflation, warning that the Fed risks overshooting on its goals. It requires judgment and confidence to know while to back off, Cohn stated.